All right, hey guys, Sam here with you. It's Thursday, December 6th, and as it's a Thursday, we look at traditional assets and through some polling of our members. First up by request is to look at the S&P 500. No surprise given the volatility we're experiencing. So this is kind of interesting. As going through this, we have a pretty active S&P day trading room throughout the course of the day. Members know this. If you're watching on YouTube and that's of interest to you, that's something that we do 3 days a week now. So up until noon, till lunch in New York. So what's interesting here, so you look here and you see this pattern over here looks a lot like this pattern over here. These look very similar, don't they? Right? So this sort of indecisive chop where you get range bound and then you get a breakout. Now the difference is relative to where we are in the count. So the assumption has been that this, that was the start of the year. In January of this year, this was our 3 high. We put in the ABC and went up, and we have a candidate here now for a pretty significant top. Now, looking at that, it's fairly, so you can look here. So we've 3-4 times. So if we look at this and just do it this way here. So just grabbing these pivots here and just looking over here at this. Right, so we've tested now repeatedly here. You could almost include that. So you've clearly got the resistance defined, and you can make the same case down here that, well, we have the break here, but if we look just at where the bodies are breaking, we have this down here. So we are absolutely stuck in this range here. Let's get this a little fatter. So here's the range that we're sitting in. You can look, we were just playing ping pong here. Now what's interesting about this, with this established, you go, well, why is it stopping there? Well, I'm going to assume that most of you have already drawn this up. All right, so that's 3 tests into the golden zone. All right, the target is down here, remains unfilled. So that's pretty interesting. So now we look at this and we think, okay, well, what would the Elliott count be there? Do I have a count? Well, that 5 is pretty solid. Right, hard to argue with that 5. You've even got the subdivision. Now I'm here on a 4-hour. You've got the subdivision in the 1 to give you the 1. Little 2, there's 3, 4. We don't threaten the 1. So you've got a very clear impulsive move coming off the high. Well, then this correction is just textbook here. So we've got just a perfect flat. So A, B, C 3 times, right? So here 3 times we've tested that zone. So if you're thinking with your Elliott hat on, well, here's the A wave. Got a nice ABC. Got a nice flat correction here. Here's the B. So what's next? Well, we got a couple of possibilities. This is also, let's pull some of this off here, just clean this up. So you look here and you go, why'd you stop there today? Now, so obviously we have some support here, but you've always got to consider, is there any market geometry there that might have been at play? So if I bring this over and get it right on that, right on it, right? So tag the median line, right? Don't forget to draw those, even though you think, oh, no way. There it is, right? Tags it, right? So what do we have here? Golden corner pocket, right? Gets just up into the golden zone, rips to the, right? So it looks like, oh, no, it's too steep. It couldn't go there that fast, right? It's 80% odds we get there. Well, it did it in pretty fast. So now that doesn't mean that the trade is over here. So we could come here, bounce, get back down here. So that median line, I would keep that on some screen somewhere so that you are aware if that's going to come back into play. Because if we're going to rebound here, so if you think about where we are, so in the larger count, so if this is 1, 2's going in, 3 yet to follow, right? So that's all pretty bearish for the S&P. Hard to come up with a bullish count that fits here. Now, is this the multi-year top? Well, certainly all the ingredients are there. You certainly have the conditions to support that. So you got to look at that and think, well, if that's the multi-year high, this is pretty much right by the book. Right, now the question is, what happens here? Do we get, so what does that 2 look like? So if this is correctly identified and this is the 1, so I'm going to take this off just so it clears up the chart. So if that's going to hold, and this is just the 1 wave going in, where we're looking for the 2 here, just off of this swing. Let me get this off of that. So it's pretty straightforward technical analysis. There's nothing particularly tricky here. So where are we looking for the 2? Well, this would be the prime spot. We can see here that's point of control. So you got a nice juicy sell zone here, just waiting, right, for that. Put stop on the other side of the 65. Beautiful, right? Well, so given this price action, if you're an Elliott Wave trader or you're thinking about being one, that again, why would you not take that trade? Right? It's like literally, it's a textbook setup. We've got point of control. We're right at the 50. We've got an Elliott count that makes sense. We're retracing to prior levels of resistance. So we're right smack dab in the middle of this range. We've got this clearly established range. That's a potential home run ball. If you get the third out of that's a hell of a trade. So if we get a full 1618 out of that, then this is going much lower. Now, we don't know, but the conditions are there. Absolutely. So you might look at that and say, well, where would that put that C? Well, we just standard ops here. We just grab the length of the A. If the B is going to hold, and this is our B, well, here's 100. 127. If the 100 breaks, we'd be looking for the 127. This would be an extreme. So then you got to put that in the context of the larger count. Well, at the very least, you might just think like an algo. There's a significant pivot there. Significant pivot here. Well, here's the 1272 would be at the 50. So if we label it up here, so if we're coming off, if that's 1, 2, 3, this is the 4, and this is the shit. Here. Ran out of room there. Okay, so let's get this up here. If that's the big high, which right now it sure as hell could be. Let's get that. We'll get that, not yellow, that'll work. Okay, so if this is 1, 2, we've got a completed 5-wave structure, so that we got to look here at the 50. Now, so at the very least, what we're doing is working from this, what is that, the 16 low, right? So this is the whole Trump move. So you could call it the, yeah, well, let's leave it at that. Okay, so here, 1, 2, 3, 4, 5, that's completed. Well, we got to be paying attention at the 50. So you've got a little cluster down here, where we could see that would be not uncommon. That's likely the 3, 4 on the way up here. So this was area of hesitation in the move. So this as a potential candidate for the C coming down here, very valid. So you've got the potential setting up here for that kind of a move. That's from 2740, call it, to 2380. That's a hell of a trade right there. So nothing says that we have to stop there. Right, this would be longer term. You'd find this resistance up here, but that's right by our 65. So yeah, that's a hell of a big move, and it could be beyond that. Nothing says we have to stop there, but that's the first place that I'd be looking. And if you're trying to dial up as potential targets, well, hard to argue with that. So let's go all the way down to the 1 hour. See what this looks like coming down. So here's the zone that's established. So it's pretty clear looking 5-wave coming down here. So here's the reaction off of, so coming back to support. So, hard to argue with the idea that we've got a clean 5 in that as well. And here I'm at 1 hour, 1, 2, 3, 4. Looks like we've got a 5. Now that's way too big. Let's go sub-micro and we'll go to green. Okay, so if that's the C of the B, then we've just done the 1 of the C. That's all that's happening here. So it's not actually very difficult to analyze here. So I suppose you can, as soon as I say that here, I second guess it. Okay, so looks like that would be your 3, 4. I might have to go down to 15 to get that. So let's just check here. If that's correctly identified as the 2 and that's the 3, well, there's the 23 just shy of target. Could be a front run here. That was the other thing that was there, which, it's always a question of, it's a bit like the Where's Waldo. Why do we stop here? Why? All right, so we're just looking for common swing relationships. All right, so to the tick, so you get confluence there. So do you see what happens here? So this is exactly 100% to the tick. Not close, not approximate, to the tick. From this swing down, projected from this swing high, exact parity. Right, so you can look at that and you can say, oh, well, is it the 100% that causes that, or is it the fact that we've previously found buying interest down here at these levels? I'll let you draw your own conclusions. I would tell you there is zero that is random in the market, zero. So if you can't find the technical cause for the pivot, either that's not the good pivot or you haven't looked at the right combinations, but it will always be there. So if this is the good low for the 1, well, this is where we're looking for the 2. Right now, look how far we've moved already. So off of that low, 26.20, we're almost 50 points off the low. So we're certainly getting a reaction off of this support zone. All it's doing, looks to me like all it's doing is setting up the A wave. A, B, C. Boom. Now, how you trade that? Now that's a function of, do you have awareness and the skill set to trade it with options? That's how I would do it. But I was an option broker for 10 years. Now, if you're just thinking about an S&P trade, well, you got to have the margin to hold that because this is a swing, not a scalp trade. So you're going to have to hold that for could be a while. So think about that. Now, it'd be less margin if you hold it in the Dow. The Dow has the exact same pattern. Something to think about here if you're going to try and carry that through to your profit targets. Something to think about here. So option would be a reasonable way to do it where you're tying up less capital. If you're thinking that you could be holding that could be 2 weeks, could be longer. If we're going to get that 2, 3, if we're going to get the bounce out here and we're going towards that 3, well, nothing says we have to stop at 100. That's just where we know it's a third. Right? So if we're 100% the range of this. So what else is going to be in here, which you can imagine is the wolf range. So let's get the let me get my template on that. Oops, I got the wrong one. All right, so here's our range. So I'm just defining it by this pivot up here. So here's 50% of the range. Here's the range that we've established, so great potential use here. Here's the 50% of that range right here. All right, so of course that's going to be right next to our potential 2. Note here we've got this prior support there all kicking in there. So you've got right smack dab in the middle of the range, you've got prior support, right, potentially sets up for the resistance. So if we look at just some of the big targets down here, well, look what happens here. So look where, so remember the wolf range, it's just, I just call it that because that's the guy who taught it to me. But all it is range expansion. So we're taking this range, here's 50% of that range, here's 100% of the range. So look at the cluster we have down here. So we have the exact doubling of the range at the 50 from the last dominant swing low at the 1272 of the length of the A wave projected from the B wave. So you've got a pretty good technical cluster down here. Let's call it 2385. So what else could be there? Well, let's look at the market geometry. So if I scrunch this up a little bit. So great application of the wolf range here. So let's just dial it up, see what's there. So here's our pivot, here's our first low. I would use the second low. All right, so where do we hit down here? Well, that's kind of interesting. All right, so that gives you at least some idea of how long it might take. I'm not quite dialed in here on these because that was a perfect tag of it. Right, it's worth doing to dial these in, and it could have been this one here. No, I guess not. Pretty sure we had that dialed right in. So if this is A, B, right, so we're getting some sense that's the value, the additional value of median lines is it's a leading indicator, so we can kind of map this out. If we're going down here for the 3 and we're going to get the 4 here, we get some sense of the timeline. So would that fit? So if we're gonna go into this and come down towards that, that's going to be a pretty good. Well, let's look at that. So if that finishes there, if we get the 2, if that's the 1, is that realistic? So if that 1 is in and done, now we don't have the 2, but look what that does. So if we pivot at the 50, look what else is clustering down here, right? There would be our high probability zone for the 3rd. So look at the number of confluence points that we have here. So we have the median line. We have the length of the 1, assuming that is our 1, and we're going to pivot here for the 2 at the 50, which is a reasonable spot for it. So here, 50%, you can see it in the wolf range. Here's the 50. Here's the 1618. Here's the 50 of the larger degree. So if we back this all out, think about, well, could this make sense? Is this a reasonable roadmap? Well, that's what we're after right here. 2380, reasonable target. So, right, so I guess we've got to go 4 hour here where we can see this a little better. So if that's going to play that way, if that's your third, 4, 5, potentially going to the 618. Okay, so what would that look like? Well, let's just measure it out. Well, if that's 1, take this off here just to clear it up a little bit. So if we got this as the third, then we'd know we had the second here. So this would be our pivot swing here. Well, try again. So this would be our 2. If we got this here, now I got to change the template. So that would put us at the next 50. Oh, interesting. Here'd be the 38. All right, so this would be, so we can see exactly here, this would be the resistance. So the prior support now becomes the resistance at the 50. So if I had to map this out, looks to me like we're going 1, 2, 3, 4, 5. All right, so looking at that, and that's assuming that we only get the 2 here, it may be bigger in the 4. So putting that back on, that may be too ambitious here. That would be the 38 would be more typical. So then we're factoring in some of that time factor here. That's where the median lines can come back into play. So this would be, if you're going to get the 4, you'd rather your 4 not. So here would be our wave 1 low. So you wouldn't necessarily want it to go that far. So if we get that, now let's put that median line back on there and see how that lines up on the timing. 1. Oops. I always forget to turn that off. Okay. As our 2. Maybe we'd have to go to a modifier here, or maybe we do it something like this. It's gonna happen more quickly if this is going to be the set of median lines that guide the market. So then we'd be something like that. That actually, the symmetry of that looks better. So then it would be something like that. 2, 3, 4, 5 would bring us back down here. We'd be after that 618, which would not be unreasonable. Putting it back in here, here's our 618. So this would be the long-term target. So if you're thinking about where you want to be taking partial profits, here would certainly be 1, but here's your longer-term goal. And what is that little yellow line tees us up with? The 1 wave, the proposed 1 wave here. So the 618, that's interesting. So the entire move. So the 618, the golden zone, is sitting just above that wave 1 high, which will be structural support for the market. So there's a roadmap. If we're this thing's turning bearish, that's a pretty good roadmap right there in terms of how this might play and how quickly it's going to happen. So if this stays game on with bears in control, that would put us, that's April. So we could again, I'm hypothetical here. I don't know what this looks like here, but just trying to frame the market. It's always good. Give yourself a roadmap. If it's following it, well, then you had an unfair advantage. All you did was lay this out. If it doesn't, then we adapt along the way. If we don't get a full 5 sequence down here, well, then we got to rethink it. Maybe it's just a big ABC and we're going up again, right? We understood. You got to recognize that potential. It's either 1, 2, 3, 4, 5 of something bigger, or it's A, B, C coming down. Now, whether or not we turn and go back up again and continue with the longer term bullish trend, well, this would be the tell. Do we hold the 618 off of that dominant swing, right? Off of this completed low? That's how we know what we've got here. Or if it's something more serious, because the alternate is that this is just this could just be a much larger A wave. So this could just be completing an A, B, and then a bigger move down for a bigger C. So if you follow that thinking. So this could be the A, B, and then a bigger C, something like that. So there's opportunity here, right? It's always a little more troubling to be on the sell side, and the market has a natural bias to go up. But all of the conditions here, it's much as that's the emotion, right? It's very hard after what we had almost 10 years of a relentless bull. Every dip has been bought has been successful. So breaking that habit, right? It's not easy to sell this raging bull, but given what you're seeing here, you're better to let the market dictate rather than what you think. Trade what you see. What do we see? We see a clean Elliott count that's completed, and now the correction has started. Okay, guys, could be very interesting. With that, I'll wrap it there. I've got 2 more today by request here, and looks like we'll look at the NASDAQ and then I think AMD as well if I can get them done for you. All right, guys, talk to you.